Hey guys, welcome back to Upside Down Data. In this video, I'm going to show you how to use these UDPI risk indicators that you see up here on the screen to try to answer the question that everyone wants answered right now, which is, when will the bleeding stop? When will the market bounce and start to recover to the upside? And I'm going to do that by looking at all 22 of these UDPI risk indicators that we built and monitor here on the channel. I'm going to list some specific benchmarks that we can look for in these data. And I'm going to give you the numbers about where exactly we are right now relative to those benchmarks. So what you're going to be getting in this video is cold, hard facts, numbers that don't have a bullish or bearish bias. So if you like the content, subscribe and like the video. Follow us on Twitter at Upside Down Data. We put out regular updates there about our UDPI risk indicators and more. So what you're looking at here is our 22 risk gauges for our UDPI risk indicators. If you've been following the channel, you're pretty familiar with these by now. If you're new to the channel, welcome. And let me explain to you what you're looking at. The UDPI stands for Upside Downside Potential Indicator. That basically means what it sounds like. So this indicator is designed to tell you how much upside versus downside is realistic for the near future for any particular asset. So realistic for the near future means, the coming weeks and up to a few months or so. And you can look at these individually, and we do sometimes. We do deep dives into specific assets UDPI charts, but it's also useful to look at these alongside each other. We have 22 of them now. We keep increasing that number, and we'll continue to. But the idea is that by looking at all of these charts, all of these readings alongside each other, you get more information than you could get from looking at any one asset on its own. If you had to choose, you would choose Bitcoin. That's the market leader. But we think that you get more information by absorbing all of this information than you would by just looking at them individually. One thing that you can do here is you can scan across these assets and you can just look at which directions the needles are pointed. When you see a needle pointed to the left, that means that the asset is relatively low risk at that time. It means that there's plenty of upside potential for that asset and limited downside potential that's realistic for the near future. Maybe that means that a lot of that downside potential is already played out. That's if the needle's pointed to the left, but if the needle's pointed to the right, then of course it would be the opposite. Then in that case, you'd see high risk relatively, and that would mean that there's plenty of downside potential that's realistic for the near future for that asset, but only limited upside potential. Maybe by that point, a lot of the realistic upside potential would have already played out. So we're going to try to use these and to try to aggregate this information and interpret it in a way that can tell us, when is the market really getting underheated, really getting low risk or oversold, whichever term you like to use for it, and what are some benchmarks we can look for. I'm going to tell you exactly where we stand relative to those benchmarks. Here's one. One thing that will be interesting to see is if and when some of these gauges drop below -4. Currently, none of them are below -4. We have some that are pretty low risk. We've got DOT over here, which is -3.1. We've got HBAR, -3.51, both below -3. But those are the lowest, and there's nothing that's at below -4. Doesn't have to. The market could reverse as a whole before any of these assets get there, and it's possible that these assets will see +4 before they see -4. But I wouldn't bet on it. It definitely seems possible that -4 is coming for at least something on this chart. Historical data from the UDPI would suggest that it's once an asset reaches -2, there's at least a decent likelihood that it's going to continue to -3 and even to -4. If an asset hits -3, there's a pretty good likelihood that it's going to get to -4. Doesn't have to, but with many of these that have already moved quite a bit in that direction, bunch under -2 and a couple under -3, definitely seems possible that we're going to see some of them getting there in the near future, and that's something that we want to take note of if and when it happens. That's not even all that could happen. It's possible that some of these are going to decline in risk so much that they'll do something that the model would consider unprecedented, that it would consider surprising and unlikely, that it would have to learn from. So the model could break if it goes below what the model would have considered to be -5. Don't expect that to happen, but it's definitely possible that it could happen, at least, for any one specific asset. And that would really tell us that we've reached new levels of bearishness. We're not approaching that territory yet, but even if we see assets starting to drop below -4, that'll be a new benchmark in reaching low levels of risk, in having cooled down a lot across the market. But it could even go lower than that. We don't know what's going to happen, but we're looking at these benchmarks here. So those are some things to watch. Another thing is that instead of looking at these at one specific asset or at a few specific ones like DOT and HBAR to see where they're going to go next, we can also aggregate across all of these. And I think the obvious thing to look at first in that regard is, when are they all going to flip negative? There are a few that are still in positive territory. Actually, 7 out of the 22 are currently in positive territory. So 15 of the 22 are currently below the 0 midpoint, but still 7 out of the 22, so almost a third, are above the midpoint. And I think the ones that we specifically want to watch here, to follow along and see when everything is going to flip negative, are ETH and AVAX. Both of these have been pretty interesting to watch recently. We've been talking a lot about AVAX actually on the channel and on Twitter, because it made this super impressive, impulsive move to the upside, went up really, really fast, and was very high risk. It was the highest risk of all of these for a bit. And we were pretty vocal about that while it was happening. And risk is still pretty high. It's still the highest one that we cover. And it still has plenty of downside potential, especially during bearish conditions. ETH is kind of a different story. ETH has been performing really well recently, despite the bearishness. The ETH Bitcoin valuation has been looking really strong, even as the market as a whole has been pulling back. And that's why you see ETH at 1.35, which is relatively high risk compared to most of these other assets across the market. So ETH has been performing kind of surprisingly well under the circumstances. Now, ETH could continue to do that, could continue to be bullish. And if that happens, that'll be fun. We'll continue to see ETH be strong. But it's also possible that with the broader bearish market conditions, that ETH is going to kind of run out of steam. That definitely seems, I think, likely if the broader bearishness continues. I think it would be pretty hard for ETH to continue to perform, even if it holds its ground relatively well and doesn't lose too much ground, or even just kind of ranges sideways. It's hard to see it continuing to be bullish when everything else is not. So ETH and AVAX are two key ones to watch here. Are they going to continue to pull back on risk? If so, we'll be interested to see how far they get, whether they cross into that negative territory or not. After that benchmark, I think then we'd look to see whether they start to flip green, meaning sub -2. That's when you'll start to see green showing up on the chart, which is, you could interpret as a go signal, relatively low risk. We're not there yet though, but if we see that all these assets cross into negative territory, then it'll be interesting to focus on -2 as a next benchmark, potentially. Another thing is specific to Bitcoin. If Bitcoin, which is about to flip into negative territory, it looks like it's at 0.06, just above the midpoint, still in positive territory technically, but it looks like it's about to flip below. And then, obviously we're going to watch and see where it goes. If it continues downwards, I think -2 would be an important thing to keep our eyes on. If it just kind of ranges there's really no edge on Bitcoin when you look at it on its own, because it's right there at the midpoint, and it could just range. It's possible. Altcoins are more volatile. It makes sense that their UDPIs might also be more volatile, even if Bitcoin kind of ranges sideways. But obviously, we're going to have to wait and see what Bitcoin does. And if it continues downwards, then its risk will continue to drop too. And as it reaches this midpoint and then -1, -2, we're going to want to make sure that we take note of that. If Bitcoin reaches the green, that will be consistent with good buying opportunities based on historical data. Okay, so those are a few things. One more thing, back to looking across them as a whole. is if we see signs of bottoming on these UDPI charts. You can look at price charts and try to identify bottoming structures. You can do something similar with UDPI charts. And, it'll be interesting to see if and when some rounding forms on these charts. Let's see what that looked like. So the point here is not to, try to inspect all of these, although you can zoom in and do that if you want on any specific asset, but to look across them and get a sense of what the trajectory is as a whole. And I think it's pretty clear, right? We've been in a downtrend. And for some assets, it's been extremely steep. So here's DOT over here. A month ago, DOT's risk was at +3. Now it's below -3. That's quite precipitous. And it's still pointed downwards. It's showing no signs of the kind of rounding that we would expect to see if an asset were in the process of kind of gradually changing trajectory, grinding around and starting to point toward the upside. We don't see that kind of curvature or that rounding for DOT. We also don't see it for Phantom or for H-bar, which have also been in pretty steep downtrends, although not quite as impressive as DOTs. And both are relatively low risk, especially H-bar, as we just talked about, that -3.51. We see this kind of pattern also for KSM to some degree, Link, Harmony, VeChain, ZIL, similar things going on for many of these assets. And there's no sign on any of them that there's a bottoming structure forming. Now, it would be a little bit surprising if there were, because it's only been a few days since this most recent drop across the market. And the UDPI is a patient model, as we've talked about. It's not going to make any drastic decisions about direction immediately. But this is going to be a really important thing to watch and see whether there's a leveling off and whether we start to see some rounding, especially across multiple assets. If we just see that one starts to turn around and point toward the upside, that could just be an anomaly. Might not mean anything necessarily, but we have all of these assets that have been behaving in similar ways. And if we see them behave in a different similar way and start to round and point toward the upside, that would be a really strong signal, I think, that the market is changing its mood, changing its direction. So these are some things to watch. This is the list. We're going to continue to monitor this. There are none below -4 right now. We want to see if that changes. Currently, 15 of the 22 are negative. Currently, 10 of the 22 are green, meaning they're below -2. So, we're going to want to monitor the proportion there. If that reaches 22, the whole set of them being negative, that would be a pretty important benchmark. Also, -2. Similarly, Bitcoin is still above the midpoint. We're going to want to watch that. And currently, as we just looked at, there are no signs of this bottoming type of formation on the UDPI chart. So that's what I wanted to share with you guys today. We'll keep you posted. Follow us on Twitter, like and subscribe. And remember, with the UDPI, WAGMI.